Write to us now. Use the word Ramdev in all your queries.
Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Indian markets take a breather on expiry day with Nifty hovering around 10,300 mark. Oil marketing companies are among the top Nifty gainers today after UBS initiates coverage on all three. Most public sector banks are off the day's highs. IDBI, PNB and Union Bank maintain their gains. Yes Bank is likely to report a healthy second quarter. The street will also keep a lookout for the management's commentary on the RBI penalty. Euro trades higher ahead of the ECB decision today. Draghi is expected to unveil QE tapering plans. And some big faces on the show today. Microsoft CEO Satya Nadella shares the advice that changed his life on the David Rubenstein show, and Mark Matthews of Bank Julius Baer on what foreign investors are going to be doing with Indian stocks. But first, let's take a look at how the markets are faring at this point in time. Neeraj is here as always to tell us what's going on with stocks today. Neeraj, this almost feels like, the hangover day after a big party. It's like...
Yeah, actually, put it really well, Harsha. Though I must say the hangover seems to be maybe just coming off a little bit because we are back into the green for the Nifty Bank and the Nifty as well. For a brief bit, we had slipped into the red because the large PSU banks came off. One, that the volumes are, okay, this is of course the chart, but the volumes today, obviously, much, much higher than what you would normally see on a day, but I think in line with what the expiry day volumes usually are. So we already clocked in about 7 lakh crores, if I'm not wrong. The F&O turnover is substantially higher too. This is usual expiry day phenomenon, so don't be surprised. But yeah, I think it's looking a good day of trade today. PSU banks, the large ones, there is a bit of a contrast here. So the large ones, the large PSU banks as well as ICICI Bank, which was active in trade yesterday, have all come off. They've come off and come off quite rapidly, holding out marginally in the green for State Bank of India, but the others have come off. But the mid-sized ones, the Union Banks, the IDBIs of the world, are actually doing very well. 6% for Union Bank, 5.5% for IDBI Bank. So those are the pockets that are finding some attraction in today's session as well. Some long build-up was seen in those stocks. We aren't seeing the usual suspects today. The cement and some of the others aren't really doing all that well. But all marketing companies, the headline stated, the UBS coverage note. I think SBI Capital Markets came and spoke today about how OMCs remains one of the top draws, and those stocks are doing rather well for themselves as well. On the outside, there are some mid caps and small caps which on specific news or otherwise are doing okay, but that's usually the case. All in all, yeah, I think you summed it up very well. Nothing that I could have said would have summed it up better. It seems like a bit of a hangover after a really big party.
Okay, here's an interesting one. And this is a chart from the terminal. This really talks about something that we've been talking about pretty much for the last many weeks now, about fund flows and what domestic mutual funds are doing and so on. The yellow line, of course, is the Sensex. The Sensex has been crawling upwards. Thanks to what happened yesterday, you've seen a spike. The blue line is the overseas investment in Indian shares. The blue line has been tapering off because we have seen FIIs consistently selling. And October, they've sold nearly $1 billion worth of stocks so far. That's the gap. And why is the Sensex still going up despite all of this? The story is well known. Domestic mutual funds have been buying. And if I can then pull up what have they been doing month on month? Here's the story. Month on month net buying of local funds has been increasing. The twist in the tail comes really here, that the frenetic pace of net buying by mutual funds is actually coming off. They're not selling, so the pace is coming off. Add to that is the FII figure that came out yesterday of about $550 million of buying that FIIs are doing, which means that the story is turning around. So it'll be interesting to say, this is all coming on the back of what the bank recap plan has done and how the view of investors on India is perhaps changing.
So let's see if this becomes a trend, because it's a very interesting trend, as you pointed out. Yes. Yesterday, from the conversations that we had with a few fund managers, I think what happened is a lot of them stated that for those who didn't have, who were not sitting on cash, who were deployed fully, local fund managers, they sold existing positions in other sectors or even private financials to buy into PSU banks. So that 156 crores net sell number that we saw could well be a factor of domestic mutual funds having had to sell a few assets, maybe more, not buying enough because banks, PSU banks rallied in a big way in yesterday's trade, so maybe they were holding back. So that's one. Foreign institutional investors probably flush with cash any which ways. They've been underweight for the last whatever number of months.
Deployed.
Saw some merit in buying into maybe PSU banks. And that will be the interesting factor, Harsha. Let's see if that buying continues. Today doesn't show the evidence of that, but let's see if that continues.
Okay. The point that you were taking about Nifty PSU Bank Index rose as much as 8% on top of yesterday's 30% rally. The question that Neeraj was asking, what are foreign investors likely to do? They're looking at India's story with renewed interest. Is that interest likely to sustain? What does recapitalization mean for the overall economy and the banking system? Let's ask one of those investors. Mark Matthews, Head of Asia's Research at Bank Julius Baer, now joins us on this conversation. Mark, thank you as always. Let me begin this conversation by asking you about what you thought of the bank recap plan yesterday. And does that, in a sense, make you change your mind about India?
It doesn't make me change my mind, but it reinforces the idea that India is certainly on the right footing. And I think that this will invigorate lending and therefore economic growth. There's no doubt about it. It's a large amount of money.
Okay. So what would you do now, Mark? We've seen, we've seen significant amount of FI interest yesterday. Is this a turnaround of sorts of foreign investors actually going ahead and buying? People who've been waiting on the sidelines. Will they go ahead and deploy money right now in Indian stocks and Indian banking stocks in particular?
You know, I hate to say it, but I kind of feel the opposite. I feel the Indian market is quite heavy right now because of the BRIC markets. Of course, it's done the best so far this year. It's the only one that's at a new high. China, Brazil, India, and Russia way below their highs of 10 years ago. And it's expensive. So we're long India and we're not going to change that. But if I was a trader, I'd actually be selling here. I think it's too toppy.
So if I get you right, you're actually saying from a valuation standpoint, it looks costlier and therefore you'll be selling. So let me get back to the point about recapitalization. Does this seem to you that the long-term problems faced by the banking industry is being addressed correctly? And do you see that resolution taking place?
Well, yes, I do. I think that there was no easy answer to the PSUs prior to this. The market certainly wasn't going to give them any money. And the only other recourse was the government. And without any money to recapitalize, they couldn't do any lending. So I suppose it was an inevitability, but the speed and size of it are certainly impressive. So I think it's a positive thing for sure. But the thing is that foreigners are already well aware of the good story in India. It does move the needle, but you have to remember there are other things going on in the world, like what's going on in China, like Shinzo Abe just winning a supermajority in Japan, Europe coming out of its doldrums. So there are many other fish in the sea.
Okay, so if there are many other fish in the sea, from an emerging market standpoint, where does India stack up? If stocks are looking expensive to you, would you sort of rebalance your portfolio? Are there pockets in the market that would seem attractive buys to you at this point?
Well, the PSUs are looking attractive now. Not all of them, of course, but specifically some of them are still way below their highs of 9 years ago or 8 years ago. Actually, I guess it was more like 7 years ago, come to think of it. But regardless, yeah, I think there are always pockets in a market as large as India. It's over $1 trillion stock market. On the whole, though, if I was to rank it, I'd have to put it now pretty low on the totem pole relative to China and the other emerging markets. And that's not because it's not a good story. It's simply it's a good story that's done very well this year.
Okay. There's a very interesting theme that's playing out, Mark. One is that investors are being bullish on stocks, but there is a certain bearishness that's creeping in the bond markets. How would you feel about, because, you know, recap has happened, you know, there might be an oversupply of bonds coming from the government. How would you feel about the fixed income market in India?
Well, I've heard people say that this is a danger, that there could be an oversupply, and I think that they'll have to be delicate in how they proceed. I have to be honest, I don't know all the technicalities in the recap and the funding of it. Nevertheless, I still think that India is one of the places in the world that still pays a large enough yield in fixed income that makes it relatively attractive. So it doesn't change my feeling on Indian fixed income. We still like it.
Mark, good afternoon. Just one question from my end. This is Neeraj also joining in. For people who've seen multiple cycles wherein domestic banks which were facing problems because lending was not possible, getting a boost of the size that the Indian PSU banks have gotten, would you believe a turn of a cycle merits a move which is sustained and larger than a flash in the pan 20-25% move? I know you haven't looked at the merits or the details of the recap in too close a detail, but it's a large enough recap to plug that one big gaping hole that the Indian PSU banks have. Because you've looked at various cycles, do you think moves of this size would lead to a sustained move, if not immediately, then over a period of the next 2 or 3 or 6 odd months?
Well, I'll have to keep it simple because you're right to point out my due diligence has been very preliminary at this point, so you're not talking to an expert. But I look at some of these PSUs; they're still a long way below where they were, 5 or 6 years ago. So they had a 25-30% pop yesterday. They probably need to cool off a little bit over the next few days. But after that, I think they can grind higher because the recap will basically plug their hole. It will essentially wipe out the non-performing assets from these banks. It's as I said earlier, a huge amount of money. And on that basis, if it allows these banks to start lending again, then they're actually still, as I said, they're way below where they were a few years ago, and they shouldn't be.
I have one final question, Mark, and this is about the Indian currency. We have seen the currency gain some ground on the back of the recap announcement, saying that it's been lifted by the prospect of bank recapitalization. What are your views on the Indian currency right now vis-a-vis the dollar?
I'd have to say it's agnostic because I feel that the dollar is actually no longer falling. And on that basis, each country will have its individual attributes. But I don't see why the rupee should appreciate dramatically from where it is now. The RBI still seems to me to be pretty loose and happy to see interest rates remain low. And cautious still. So I don't see the need for the rupee to go up. I just see it more going sideways.
Mark Matthews, pleasure having you on the show. Many thanks indeed for joining us today with your views. That's a view from Julius Baer about what this will mean for foreign institutional investor interest. He actually believes that stocks are extremely expensive and he'd probably be booking profits at this point in time. On that note, news flashing on your screen is numbers from Whirlpool. Good set of numbers, 25.5% increase in their bottom line. The sales are up about 37%. Margins are up at about 9.8%. Bring up the stock of Whirlpool to tell us where this is going. The stock is marginally up in trade today. But we are sticking to the theme of the bank recapitalization and what it's done for the overall markets. But many questions have been asked about how will this bank recap actually work? What are the mechanics of bank recap? I'm joined by Anirban Nag of Bloomberg News, who's been speaking to a bunch of people in the market, economists, bond market guys, credit rating agencies. The first question, Anirban, thank you so much first. Who is going to be buying these bonds? How will this work?
Well, Harsha, if you go by history, the last time that they issued, the banks themselves will probably be buying, and this time around banks are flush with a lot of the deposits post the cash ban. So what we're going to see is probably we're waiting the details from the government, depending upon whether these are going to be marketable or non-marketable securities, how they're going to be announced. But what the feeling that you're getting is that the banks are sitting on a pile of cash, credit is not taking off, so banks themselves will be buying these bonds per se. And then later on, if they're made marketable securities, then we'll see probably a market for them, or they can be converted into equity or perpetual bonds. We'll see how it goes on.
How is the street reading how the Reserve Bank of India is going to look at all of this? What will this mean for monetary policy?
Well, in a nutshell, the way the bond market reacted to it yesterday was, hey, hang on, there's a lot of supply coming in, so it's not great news. But at the same time, what people are getting optimistic about is that the growth was not happening, and this recapitalization news will probably see credit taking off, growth happening. Now, if growth happens, inflation is likely to take off. In that case, I don't think the RBI will have too much room to cut interest rates per se in the coming months.
Okay, very quickly, what a credit rating agency is saying, and the impact on the fisc is a bit, there's a gray area. You don't know whether they're going to factor it in or this is going to be an off-balance sheet item.
Absolutely. Look, the credit rating agencies, especially from the credit side, they've all welcomed it. It's a credit positive. But they're all waiting on the sovereign side. They're waiting for more details. They want more how the government is going to treat it as an off-balance sheet item that they did last time, or are they going to do it like the IMF treats it as below the item ticket number? So we'll see how the government goes about treating it. If anyways interest costs will go up, but that's going to be a very, very small amount of the budget, 0.9% if you go by the numbers.
Anil Banvili with that. Thank you so much indeed for joining us. That's how the mechanics of the recap is likely to play out. All right, let's talk about the ECB. Almost 4 years after the Fed began slowing its quantitative easing, Mario Draghi is prepared to unveil how the ECB will pull back its bond buying program. Maxime Sabehi of Bloomberg Economics now joins us from our studios in London to tell us what's the expectation. Maxime, thank you so much for joining in. What's the market expecting? Will Draghi finally unveil his tapering plan, or is this going to be wait and watch?
Yes, good morning from London. It's an important meeting for the European Central Bank. If you look at the Eurozone economy, it's actually doing better than in the past. We have unemployment at a 9-year low. We have growth actually pretty strong, but inflation is still far off target. So we expect to see here cautiously optimistic Mario Draghi at the press conference. We also expect him to announce a reduction in the pace of asset purchases. Right now, they're buying every month 60 billion assets on the secondary market. We expect them to start buying 40 billion as soon as January, and for at least another 6 months. So that's a reduction in the pace. They add stimulus, but at a slower pace. So basically, you don't push hard on the accelerator, you just lift your foot a little bit. Now, what's important to know is that this program is open-ended by nature, and we expect him to remain open-ended. That means if they want to extend it, if they want to reduce it further after the 6 months period, they can always do that. They can always adjust the program if the data requires it, and that's the flexibility they want for the program. The last thing is that the forward guidance is expected to be unchanged. The forward guidance of the ECB promises to keep interest rates at a low level for an extended period of time and beyond the QE horizon. This is very important because what that means is that the ECB is unlikely to hike rates before 2019 at least.
Okay. One very quick question. Is it likely that the rules of the game might be tweaked, or are you going to see the actual, the full, details of tapering being unveiled only by December? Do you expect any of the rules to be tweaked beforehand?
So we don't expect the rules to be tweaked. They don't need to tweak the rules right now. They might need to do it in a couple of months. We don't expect the full details of the rescaling today. They might wait until December to unveil exactly how they're going to do this, what exactly they're going to taper in the QE program. But for now, they have enough legroom to be able to continue doing the program with the self-imposed rules they currently have.
Maxime, we'll leave it there. Thank you so much indeed for joining us. That's ECB for you.
Thank you.
Later this evening, we'll hear from Mario Draghi on what happens to their tapering program. Back home, we are in the middle of earnings season. Yes Bank, Biocon, Jubilant are some of the big numbers, that big companies that are going to be revealing their numbers today. Let's get in our research team to take us through the key points of what you need to be watching out for. Shraddha, Agam and Darshan is here to tell us what's likely to happen. Let's start with Shraddha, who's going to talk to us about Yes Bank, the big one today.
Well, yes, the recent trends that we have seen with respect to CASA, the loan growth and earnings growth are expected to continue for Yes Bank in this quarter as well. So if you look at some of the key numbers, net interest income is seen growing by 29%, net profit is seen growing by 29% to 1035 crores, and net interest margins should remain closer to that 3.7% mark. In terms of the other factors, loan growth is seen coming in at a strong 30%. That's the kind of a trend that we have seen from Yes Bank in the recent past. Asset quality again seen remaining stable with the gross NPA number at 1%. Now, asset quality performance for Yes Bank so far has been significantly better than the industry. So that's one thing that will really be the key needle to move the stock direction today. But we're also watching out for the management's guidance on the top 50 NPA exposures. But broadly, analysts do expect steady earnings growth to continue.
That's exactly the one, isn't it, Shraddha? The top 50 exposure is going to be what the market is going to be watching out for. A couple of days ago, they had a penalty as well. Yet the consensus price on the Bloomberg is still at about 380 levels. Let's wait and watch where that stock goes. Thank you for that. We'll wait for those numbers. Shraddha will be back to give you a little more insight once the numbers come out. Jubilant, and Agam is here to tell us why Jubilant is going to be interesting.
It's going to be interesting because the management has changed its strategy in the past couple of quarters, and that may result into a better quarter than what we've seen in the previous financial year. So starting off with your top line, we're expecting about a 9% growth, and we can expect an expansion in margins of up to 11%, the profitability moving up as much as 23%. Why? Same-store sales growth expected to come at 5.5%. That is a very good number for Jubilant FoodWorks to go with. We're expecting in about 12 stores in terms of Domino's addition. And again, we will be keeping an eye on the kind of demand sentiment and discretionary demand, especially whether or not that has picked up. In terms of margins, again, we are expecting expansion, but because of the fact that Jubilant FoodWorks is so heavy on employees, that could be a factor that could bear down on margins. But on the whole, we're expecting a steady quarter from Jubilant FoodWorks.
Agam, thanks for that. Let's also talk about Biocon. It's not been the best of times for Biocon in the last 3 months.
Yeah.
What are we expecting on numbers?
See, in terms of numbers also, it'll be weak. It was weak in terms of share price because of regulatory issues that it's facing. But that also will impact the numbers. So overall, we are seeing sales up by 8%. Their statin business is seeing a lot of pricing pressure currently. It's facing a lot of competition from the US markets, from the other markets. But their insulin business is doing well. Emerging markets, they are doing well. Their Malaysia facility has started, so products from there have started in. But because of this Malaysia facility, there are a lot of upfront costs that have come in, and that will impact the EBITDA and the margins of the company. Also, they will take a lot of remediation as far as their Bangalore plant is concerned, because there are issues with the US FDA and the French authorities. And that is something that will impact the margins of the company. So we are seeing EBITDA margins come down to 23% from the earlier 25%. And we are seeing profits down by almost 30% for Biocon this time around.
Darshan, thank you for that. Thanks, guys. This is earnings preview on some of the big companies that are expected in the next couple of hours, maybe. But the one that disappointed the market is Mindtree. Stock is down more than 3% now after the IT company posted a 2% rise in its net profit. The MD and CEO of Mindtree, Rosto Ravanan, is confident that cost pressures have bottomed out, in fact, and new orders will only start coming in from here on. Nishant Sharma caught up with Ravanan and asked him about the sectoral breakup from an order book standpoint.
I think comparisons are a little difficult because each of us deals with a separate set of customers, have made different strategy choices, have different priorities, etc. So I think comparison with the rest of the industry may not probably be appropriate in this context. Speaking only about Mindtree and our BFSI business, I am actually very, very bullish because we had a few customers who had business priorities, changes, challenges, and therefore their spend with us was reducing, I would say, over the last 4 or 5 quarters. Those kind of cases where we had problems, I think have practically sort of reached their bottom. And some of the new wins that we've had are ramping up really, really well. For example, we announced the largest win in the history of Mindtree from a new customer in October last year, which is a BFSI customer, actually has grown to enter into the top 10 relationships of Mindtree today. So some of the new wins are scaling up very well. We believe that helps us to stay on a strong growth momentum for the rest of this year.
Right, and what's your outlook from the travel and hospitality space? You expect to continue the growth, or the path look a bit patchy now?
No, I think we are well poised. Even this quarter, like I said, you had some good wins from our customers in the travel industry. We are also very excited about the kind of work we are doing with some of our customers. I think travel and retail probably have been the earliest adopters of digital and now have started to expand into very large programs that connect them to their customers better. So we're also seeing very, very cutting edge kind of new technology work with our customers in travel and hospitality, which is our absolute sweet spot. So that also augurs well for us in terms of growth opportunities within the travel industry.
Roster Ravanan from Mindtree seems confident about the way forward, but the market did not quite reacted badly to the numbers today. Stock is down about 4.5%. Let's move on. He leads one of the world's largest technology companies, but all Satya Nadella wanted to do was play cricket. It was in fact his father who pushed him to take up engineering. Well, no surprises there. And the rest is history. Speaking to Carlyle Group's co-founder David Rubenstein on the Rubenstein show on Bloomberg, Nadella also spoke about the advice that he got from his mentor Bill Gates and Steve Ballmer.
The best advice I got from both Bill and Steve, I think helped me a lot, because their clear message was, don't try to be like us. Don't even bother to sort of say, oh, I'm succeeding these people. Just be your own. In fact, I remember very distinctly, even during the interview process, this is for the board was conducting, they asked me, hey, do you want to be the CEO? And I said, only if you want me to be the CEO. And the feedback I got was, well, but people who want to be CEOs are like, I want to be CEO. I said, look, that's not me. And I remember going and talking to Steve, and he says, yeah, just be yourself. It's too late to change.
Since you've been the CEO, 3.5 years, the stock is up about, I guess it's about 120%. When you go to your annual shareholder meetings, you get a standing ovation for what you've done?
No, I get a lot of people asking me, hey, look, come home and fix my computer.
Okay. You are a native of India. What part of India?
I was born in Hyderabad, which is in the central part of India.
And so growing up, your parents doted on you, I assume?
Yeah, they did.
And they told you were going to be Prime Minister or something important in the country? What did they want you to be?
They just wanted me to stop playing cricket and take my studies a little more seriously.
Now, you were an avid cricket player. Is that right?
Yes, that is correct. I was in love with it, yeah.
And when did you realize you weren't going to be a professional cricket player?
Pretty soon. Quickly, I realized that at best, I would play, what is considered perhaps first-class cricket in India, but I was not going to go much further than that. But then that's when my dad, in fact, I remember one of the big decisions that changed my life was, my entire outlook was so provincial when I look back at it, which is, hey, I want to stay in Hyderabad, maybe study economics and political science and work for a bank. That was about the extent of my ambition. And he looks at me and he says, what are you doing? You got to get out of this place. And so he pushed me out to get to an engineering school, and that pretty much, of course, defined the trajectory afterwards.
Your father was a member of the senior civil service, which is an important position, I guess, in India. Is that right?
Yeah, my dad was a very different guy than me in terms of, let me say, his academic prowess. So it is always humorous, which you look at my report cards and he says, oh, I don't understand how anybody can have these kind of marks. But the nice thing about it was he would say it in such endearing ways that it never made me feel bad.
You mean the marks weren't high enough or weren't?
Not high enough.
They weren't high enough.
Because, yeah, the guy had never met an exam he didn't ace, as he would say.
Okay.
And so he was like, it was astounding to me that he would have a son who couldn't ace an exam.
Now, your father's still alive.
Yes.
And he must be very proud of what you've achieved.
Not enough.
So you went to college in India, and then you decided to get graduate school in the United States. So
Yeah.
where did you go?
I went to University of Wisconsin in Milwaukee for my computer. That's when I switched from electrical engineering to computer science.
But when you're in India, University of Wisconsin, Milwaukee can't be that well known in India. So how did you happen to wind up there?
I'd never been to west of Bombay, quite frankly, and then I showed up in Milwaukee.
Did you have a winter coat or what?
That was my first very valued possession in life, a winter coat, which is very important. Unfortunately, I'd picked up this bad habit of smoking in India in college. And the one nice thing about going to school in Milwaukee is if you're a smoker, you had to go out in the winter and smoke. And that one winter in Milwaukee cured me of my smoking habit.
Wow, good. So you got a job after you graduated at Sun Microsystems. And what was your job there?
I was a software developer.
Okay. And then you got recruited to go to another company called Microsoft. And that was in 1992?
That's right.
So, but you also had applied to go to the University of Chicago School of Business. So how did you decide to do one or the other?
You know, quite frankly, David, I was very committed to saying, oh, I want to go to the business school. Maybe, who knows, maybe even go to Wall Street. That was sort of my...
The highest calling of mankind, right?
Says David Rubenstein.
Right.
And I thought, wow, maybe that's what I should do. And then somewhere along the lines, I started talking to people and I said, hey, why would you do that? You're in tech. And you should really come back. It's an amazing time because Windows NT, which eventually became our server business and what have you, was just starting out. And I subsequently went and did some combination of part-time and other courses and actually finished my MBA, which I find stunning.
Yeah, you can get a lot more of that fascinating conversation all day today on Bloomberg Quint. All right, the markets are pretty much where we left at the beginning of the show at about, the Nifty is trading at about 20 points in the green. But before we go, here's an interesting slice on Power Lunch. For all car enthusiasts, we left the best for the last. Here's some amazing futuristic cars showcased at the Tokyo Motor Show. Enjoy.